If you're thinking about starting a business or restructuring one you already have, you're probably wondering what's the real difference between a corporation, a C-Corp, and an S-Corp. Most people use these terms interchangeably, and that's where the confusion begins. Because when you don't understand how these structures actually work, you can end up paying more taxes, limiting your funding options, or even getting on the wrong side of the IRS. So today, I'm breaking it all down clearly and simply so you don't make a costly mistake. Hey, I'm Bobby Casey. I've been helping entrepreneurs, digital nomads, and location-independent business owners legally reduce their taxes, protect their assets, and simplify their business structure for more than 20 years. Over that time, I've seen it all. People setting up corporations in the wrong states, choosing the wrong tax classification, or missing major tax-saving opportunities just because they didn't understand the difference between these three terms. So let's fix that. This is going to be your no-fluff, no-jargon explanation of corporation versus C-Corp versus S-Corp. By the end of this video, you'll walk away with three things. 1, you'll understand exactly what a corporation is and how it differs from an LLC. 2, you'll finally get the difference between a C-Corp and an S-Corp and why it matters for your taxes. 3, and you'll know how to make the best choice based on your business goals, whether you're solo, scaling, or raising capital. And I've got a simple rule of thumb at the end of this video that will make your decision way easier, so stay tuned for that. Let's start at the foundation. What is a corporation? A corporation is a legal business entity you form at the state level. Think of it like a container, a protective wrapper that separates you, the individual, from your business. This separation is a big deal, because once you form a corporation, you're no longer personally liable for business debts or lawsuits. That's called limited liability. If the business gets sued or defaults on a loan, your personal home, your car, your bank account, those things are protected. Now, people often confuse the legal structure with the tax structure. So here's the key. When you form a corporation with the state, you're choosing the legal wrapper. But how that corporation is taxed, that's something you elect with the IRS at the federal level. That's where C-Corp and S-Corp come in. They're not different types of businesses you form, they're different ways your corporation gets taxed. So to recap, a corporation is a legal entity that gives you protection. A C-Corp or S-Corp is how that entity is treated for tax purposes. Still with me? Good, because here's where it gets interesting. When you form a corporation and do nothing else, the IRS treats it as a C corporation by default. A C Corp is a completely separate taxpayer from you as the owner. It files its own tax return, Form 1120, and it pays taxes on its profits at the corporate tax rate, which as of now is 21%. Now here's where that dreaded term comes in, double taxation. After your C-Corp pays corporate taxes, if you as the owner want to take profits out of the business, you usually do that in the form of dividends. And guess what? Those dividends are taxed again on your personal return. So first, the corporation pays taxes. Then you pay taxes again on the money you take out. This doesn't mean C-Corps are bad, far from it. There are good reasons to choose a C-Corp, especially if you plan to raise money from investors. You want to offer multiple classes of stock, or you're thinking long-term about going public. Most big companies, Apple, Google, Amazon, are C-Corps. Venture capitalists prefer this structure because of its flexibility with shares and fundraising. But if you're a solo business owner or a small team, there's often a better option. This is where the S-Corp comes in. An S-Corp is not a different kind of corporation. It's just a tax election you make with the IRS by filing Form 2553. When you elect to be taxed as an S-Corp, the business becomes a pass-through entity. That means the business itself doesn't pay federal income tax. Instead, the profits or losses pass through to your personal tax return. But here's the real kicker. S-Corp can save you a lot of money on self-employment taxes. Here's how it works. You, as the owner, are required to pay yourself a reasonable salary, and that salary is subject to Social Security and Medicare taxes, just like any W-2 employee. But the rest of your profit, you can take it as a distribution, and distributions are not subject to self-employment taxes. Let's say your S-Corp earns $100,000 in profit. You pay yourself a reasonable salary of $50,000, subject to payroll taxes. The remaining $50,000 can be taken as a distribution, saving you over $7,000 in self-employment taxes. That's real money in your pocket. But, and this is important, there are rules. You must pay yourself a reasonable salary based on your role in industry. You can't have foreign shareholders or more than 100 shareholders. You're limited to one class of stock. So, while S-Corp are amazing for solo entrepreneurs, consultants, coaches, and freelancers, they're not ideal if you're planning to raise capital or bring in foreign partners. Let me address a few common questions I hear all the time. Can I be an LLC and elect S-Corp taxation? Yes. You can form an LLC and file the same Form 2553 to be taxed as an S-Corp. That gives you legal flexibility and tax efficiency. Tons of small business owners do this. Can I switch later if I change my mind? Yes, but there are deadlines and limitations. If you want to elect S-Corp status, you generally have to file early in the tax year or within 75 days of formation. Can an S-Corp have multiple owners? Yes, but all must be U.S. citizens or residents, and again, you can't have more than 100. So it's not one size fits all, but it's also not rocket science once you understand the game. Let me give you a simple way to decide. If you're a startup planning to raise venture capital, go with a C-Corp. If you're a solo entrepreneur or a small team looking to minimize taxes, look into S-Corp status. If you're not sure, don't guess, get help. That's exactly what we do at businessanywhere.io. We make it easy to register your business, make the right tax elections, and stay compliant without wrestling with government forms or IRS hold music. We handle your EIN, S-Corp election, virtual mailbox, and registered agent all in one dashboard. Simple, fast, and remote. If you got value from this video, smash the like button, subscribe, and drop a comment with your questions. I actually read them. And hey, if you're serious about building your business the smart way, subscribe to this channel right now. Because let's be honest, you'll either spend hours digging through IRS PDFs or spend 10 minutes a week learning from people who've already done it the right way. Your future self and your accountant will thank you. See you in the next video.